me is Hersh Sayta. Good morning, Hersh. Clearly, if you see from a market's perspective right now, we are hovering around the 21,850 mark, gains of around 0.3% coming in there. Pressure continues to build with regards to Bank Nifty as well. The kind of cuts that we saw in terms of the banking heavyweights, that has continued today as well. Nearly 185 points decline coming in terms of Bank Nifty. The advanced decline ratio, though, in terms of Nifty 50 is in favor of the bulls. You are seeing a HDFC Life, which is the top gainer today. In fact, 2 to 3 sessions where life insurance companies have been on a positive streak. Let's pull up the other insurance names as well. LIC, which is another one which has seen smart moves in yesterday's session as well. Today, 0.2% higher. Bharti Airtel is reacting to numbers, 3.5% up move. IT is up in trade, Wipro as well as TCS. Maruti, 2.5% up move. Pressure building in on a power grid. In fact, that stock is seeing profit booking after the kind of surge that we saw in yesterday's session. Along with power grid, you had a NTPC, NHPC, SJV, and all of these counters which were up and about on the back of the allocation that has been increased. ITC, Britannia, both of these FMCG players trading under pressure. In fact, Britannia will be reporting numbers today, and you have a Nestle that will be reporting numbers tomorrow. So this pack is going to be in action. Hindalco as well as the IndusInd Bank. These are a few of the other names that we have been watching out for. So that's with regards to where benchmarks go. Harsh, how are you looking at the broader markets as of now?
Well, Hiral, you have broader markets outperforming. Of course, you have certain buzzers which I'd quickly like to flag off. You have the likes of an IEX, which is up nearly 4% in trade after positive volume numbers. Yes Bank also in focus on the back of approval given to HDFC Bank Group to acquire around 10%. You have the likes of a Paytm, which has obviously opened circuit 2.5% higher. On the back of numbers, a plethora of stocks. But let me first quickly go to the mid-cap, the top winners on the Nifty mid-cap. The advance decline clearly in favor of the advances. The top winners there being Yes Bank, we did speak about it, Fortis Health and Ipca Labs, all three of which are gaining over 5% in trade. Top losers there, you have the likes of a Crompton, APL Apollo, Bank of India continues second day lower for Bank of India on the back of numbers. The Nifty small cap too outperforming around 0.2% higher. But we'll put our focus on one counter in particular, and we have Responsive Industries. Let's pull up the stock on charts. There you go, absolutely flat in trade despite that spike early on. And we have with us the management. We have Rishabh Agarwal, who's the CEO at Responsive Industries, who's going to join us now. Sir, assess give us a broader level understanding of the quarter itself. How has the quarter gone for you? Your margins continue to trend in a good mid-20s kind of band. Is that kind of number sustainable?
Thank you so much. Yes, the quarter has gone well for us. The focus of the company through the value creation, through the luxury vinyl segment and other value-added categories has been towards margin expansion. And this quarter is reflective of the activities of the company. And, we expect these kind of quarters to continue to come, with us stepping up the gear a little bit in terms of revenue as well and maintaining this kind of margin profile. So the mid-20s is an absolutely accurate benchmark in terms of the EBITDA margins. And, we've seen a lot of interesting growth from the railways. We are beneficiaries of the Vande Bharat and other such initiatives from the government. The infrastructure spends continue to help us, especially on the e-mobility, the bus markets, things like that. So we are, we are suppliers to Tata Marco Polo and those kind of, OEM suppliers. And then in addition, we continue to grow exports. So the luxury vinyl tile segment exports to the US and other Western markets continue to be a growth driver for the business.
Right. Rishabh, this is Hiral on this side. So overall, when you take the aspects that you mentioned about into consideration, from here on, what's the trajectory expected to look like over the next 3 to 5 years? Because overall, we've seen that expansion in the markets that you've done. That's what has driven the EBITDA. 30 to 35% CAGR growth is what you are looking to grow at. But taking the kind of development, the orders that you've got recently, even from Ayodhya and other regions, how does this all go for you? And do you see something better than what you've already expected?
Oh, absolutely. Thank you so much. It's a very optimistic time for Responsive. We've laid the groundwork for very large customers, in large areas of growth, right? So there are three verticals really to speak of. The luxury vinyl plank portfolio continues to grow strong in the US, especially with the China Plus One and Responsive being 30 plus years in this particular field. And with more than 5,000 retail stores with a Responsive brand on display across 30 US states, we continue to grow and trend in that direction. The second wing, the railways, they have been a customer for us a long time, but with the renewed push with the railways, the margins continue to remain, but we do expect a lot of order growth and, we'll see how the next few quarters track, but it's very optimistic. And, as far as infrastructure in India is concerned, the bus market continues to remain very strong for us. So the three segments to think about is luxury vinyl plank exports, railways, and buses.
Right. Now I want to try and flag off a piece with regard to especially your material cost, PVC being a key component for you, if I understand correctly. Now, PVC prices have been softer. They have softened quite a bit. What happens going forward? Because there is some commentary that PVC prices could start to inch higher. How are you protecting yourself against that?
So commodity and freight, two prices continue to impact the business at some level. But what we've been able to transition to is really value added, delivery to the customers. In terms of the luxury vinyl, the aesthetics that we bring, the 100% waterproof EIR roll bevel, there are certain features we bring to the customer where the brand speaks more so than the commodity value and the freight itself, right? So that's where we have certain price protections in place, which we continue to enjoy. In terms of the railways and in the buses and those segments, it's similar things. It's performance-driven products. We guarantee a certain level of performance as far as slip is concerned, stain ratings are concerned, and fire and safety protocols are concerned. So while the commodity prices can sometimes be volatile, we've seen the swings over the last 2-3 years, and we have a very active purchasing function internally, and we're able to forecast to a fair degree. And, PVC has been something we've been dealing with 20 plus years. So, we have good competence in dealing with this. So we think that, the commodities, yes, they continue to go up and down sometimes, but, by and large, we're in a good place.
So Rishabh, overall, what's the capacity looking like for a Responsive, and what are the utilizations looking like? And to achieve the kind of growth that you're projecting, any additional capex that would be incurred?
So we are at about 65 to 70% capacity utilization rate. As we continue to grow into this year and into the next, we are right now zero long-term debt. We are in a very good net cash flow position. We do not anticipate any, capex in the near future to continue to fuel the growth. Now, when we're reaching those 100% utilization levels and we've hit some of those metrics, then we can look at the capex plans down the line. We are dealing with a few very large growth segments, and it's exciting times for us. So where those capex dollars will come, also where the capex dollars will be deployed down the road, that's a conversation for another day.
Right. Rishabh, another question. I know you're saying that you're not looking at a heavy capex from here on, but from a cost of funds perspective, are you seeing any impact in terms of where business is concerned? Because cost of funds is high right now in the system, right? Anywhere there is an impact that's coming in?
So the cost of funds is an interesting piece of it, right? So that affects, that affects your purchasing decisions across the board. So, if you're talking from a customer perspective, right, the positions that they carry on inventory, obviously reduces a little bit, vis-a-vis what they would have done in the past. But what we have seen is actually a more steady volume of orders, and we are seeing less hoarding, and we are seeing more predictable orders. And it's actually been better for the manufacturing and the order book as far as that's concerned. Now, in our case, since we are zero debt, the cost, the major cost of funding does not apply to us in the current thing. So the only piece in play is a working capital, but even then our cash flow is quite net positive. So from our business, the way we are positioned from a liquidity, cash and cash flow position, we are in a pretty good place. And, our customers continue to buy, and, business continues to roll. So it's been a fairly positive period.
Absolutely not relevant as of now. But the reason I ask you is that we do have the RBI policy slated for day after tomorrow, right? So taking the industry also into consideration, maybe not a responsive, do you think it's time for the RBI to go ahead and cut rates?
That's a great question. Look, from an industry perspective, if the cost of funding is, if the cost of funding gets a little, more attractive for companies, it definitely spurs, capex cycles and other investment cycles. And, no one can say that's not good for the economy, right? But, to comment on a RBI perspective, I would say that, this is above my pay grade a little bit.
No, absolutely, Rishabh. Appreciate that. But let me quickly move on. So I want to try and understand. I'll come back to where I was earlier with regard to margins. Around 30-35% CAGR is what over the next couple of years you're planning to grow by. At least that's your guidance. Will you be able to stick to that 20% plus kind of margin, given the fact that now you're more into the more premium segment of products?
Absolutely. So, we've worked very, very hard to get to this level of margins. We've got now a few quarters under our belt where we've established the product baselines, right? In terms of what we sell, in terms of the product mix, in terms of who the customers are, and where the growth is going to come from. So, we definitely expect to be able to maintain the run rate on sales and margins, but, with some continuing adding of customers, which we are in the process of talking to a few people, it can really positively impact the revenue numbers, right? And we keep the margin levels to what they are. And, with a certain hits, we can even look at a little bit of margin expansion, further on from here. So, the CAGR that we are talking about keeps in line with the margins and it keeps in line with the potential. So we are trying to use our capacity in the best possible way, right? Margin expansion and driving the right kind of sales that keeps the margin consistent, right? That's the philosophy.
Right. Very lastly, Rishabh, we did touch base on Ayodhya, but I just want to understand how big is that part of the business going to be from here on, from a region-specific perspective? Because things are still evolving, right? And that's one of the biggest things that we as a country are doing right now. So how big will that be for a responsive?
So Ayodhya is a part of the larger story on hospitality, right? I think overall the tourism sector in India is still underdeveloped. It's continuing to develop. You're getting hotels that are being built, and not only hotels, but I would say the infrastructure around tourism, right? So you'd say hotels, restaurants, all kinds of, all of those kind of buildings. Responsive is very much with the LVP segment into the hospitality business, right? So we are specified with some of the major brands across. We are a regular feature into the rooms, especially with the new constructions and the refurbishments of all the hotels and things coming up. And, Ayodhya is definitely exciting. It's breaking new ground in terms of just the tourist potential of the country. But, we think that, one Ayodhya will spur, 100 Ayodhyas in India, so as to speak, right? And, we expect that to continue to be a very, sort of bullish industry in India, at least.
Sure. Point taken, Rishabh, but we're out of time this time around. So thank you for all of those views. That was, of course, Responsive Industries, the management there with us, talking about their guidance going forward, as well as various aspects with regard to the industry. With that, we'll slip into a very short break. More on the other side. Stay tuned to NDTV Profit.
Welcome back. You're watching the Small and Mid-Cap Show. Clearly, Orient Cement is in focus as well. The stock is seeing gains of almost 4.5%, trading at the day's highest levels, and this is mainly on the way the earnings have panned out. In fact, you are seeing some bit of bottom fishing that's happening with regards to cement as a sector as whole. If you see in terms of where Orient Cement goes, clearly the profits have improved 63 to 64%, and that's an interesting one. And this is in spite the revenue growing only 2.5 times. Margins have improved substantially as well. Let's welcome in our guest to understand, what's worked. We have Deepak Khetrapal, Managing Director and CEO at Orient Cement, who joins in. Deepak, good morning and welcome to the show. Spectacular show in terms of margins as well as profitability. What has worked in spite of a single-digit growth in terms of revenues?
Morning, and thank you for having me on your show. Well, just let me correct you. In terms of, if we talk about Q3, in fact, we have a little bit of degrowth in volumes, which we believe is in line with the industry. But at the company level, we are disappointed that we've had degrowth in a very important quarter of Q3. There are multiple reasons: elections in our states, Bombay, Pune, major market having AQIU issues this year, and construction being banned, and a few other, unseasonal rains in some of our markets. So volume has degrown. But what we have been following for a long time, I'm coming on your show for the first time, but as for a long time in our company, we followed a strategy of what we call selling more of our premium cement. Rather than staying with the commodity OPC, PPC, we've actually created a good portfolio of 3 premium cement, and that helps us in fighting the price trends in the market, because we get the price because in that quality product range, we really see no competition. So that's one of the things which works for us. Secondly, we choose our markets and customers very carefully. If we do not get a benchmark level of contribution, we walk away from the orders and don't do business which comes at lower prices. So that leads to somewhat lower volumes. But the overall efficiencies and overall, I would say, the system, the way it delivers for us is working a lot better. Truly speaking, I think this is something which we have to, although I'm saying we sacrifice volumes, but if we look at the only official data on cement volumes that's available, that is released by DPIIT, till end December, the 9 months, I think our overall growth in volumes also is in line with the industry. We are not behind. But we worked on the strategy to realize better prices, so that we feel happy about. And yes, EBITDA per ton at around 840 rupees a ton is what we've been promising the markets will come back to, and that we are glad that we are there in the Q3.
Got it. Deepak, a couple of points that you've made, and I'd like to try and get a better perspective on some of those numbers. One is with regard to volume. So where should your FY24 full year volumes be? You've guided for FY25 volume growth of 10%. Would you be able to get there? Would you be able to exceed that? So just trying to understand, are some of these orders which you were expecting in Q3 pushed to Q4 and FY25? How does it work? So that's one. Second is with regard to sustainability of that EBITDA per ton number. Is that number going to be sustainable going forward as well?
Well, let me first answer your last question. Okay. On EBITDA, we feel very confident not just to be able to sustain it, but improve it in Q4. So that's the plan that we're working on. In terms of volumes, see, in cement industry, typically, it's a construction activity. So it's not that the orders that we were to receive have got deferred. In Q3, somehow in certain markets, the Telangana, which is a home market, that went under elections. So when the state government elections are on, similar thing happened in Madhya Pradesh, where we sell about 10% of our volumes. So some of our markets have been impacted by the state elections. Once the elections are over, I think we should regain the rhythm. In terms of total volume, that's the first question you asked. We've done nearly 4.4 million tons in the first 9 months. Typically in the third quarter, we want to do, and we have done in the past also, volumes in excess of 1.8 million tons. So we should end the year with a total volume of what, 6.2 million plus, between 6.2, 6.3 is what the visibility is. And for that, typically the momentum in the market that we always have seen and that we expect this year also in Q4, that needs to be there to sustain us. Now, why I'm saying that needs to be there is, unfortunately, the month of January for the whole industry, I don't think has done as much as normally January does. So January perhaps has seen a small degrowth in January, which is sort of making our challenge of climbing that, the asking rate in the balance about 7 weeks of this quarter is very high. But even then, knowing how cement demand was trended in the last quarter and last few weeks of every financial year, we seem to well poised to at least get to about 6.2 million.
Okay, so 6.2 million is what you're looking at. And from a price trend perspective, what's the sense that you're picking up, Deepak? Because a lot of expectation is that February there's a possibility of a price hike coming in. If so, what could that range be? And do you think that the markets are ready to absorb that kind of price hike?
Well, prices are always something that always baffles us in terms of how the market prices behave. As of now, to be honest, we have not seen any price increase in this current quarter. So it's a bit of a struggle right now. Would the price increase come, and when it comes, would it be absorbed? It's largely going to be driven by how the demand picks up. If the demand remains soft like it has done in the first 4 or 5 weeks of the quarter, then for the price hike, even if it comes in to get absorbed, becomes a challenge. Our hope is all around the fact that the demand will pick up, and that should allow the industry to get somewhat better prices from the market. I mean, that's how we look at it. If demand doesn't come in, I think we'll remain under a little bit of pressure on pricing too.
Sure. Deepak, I'm going to try and stick to this question, try and understand better with regard to EBITDA and how that is evolving. Talk to us about how your revenue is up around 2.6 odd %, but your EBITDA has gone up 27%. What's gone right for you? I know you spoke about premiumization, and therefore, will you be able to maintain that kind of a number?
Well, premiumization stays. We've been following this for the last 4 years plus. It's just that the portfolio has got completed only now. The other part which contributes to EBITDA is actually the cost management. Now, if you look at our power and fuel cost on a consistent basis, we've been making improvements, one in the efficiencies. Our efficiency numbers are something which the industry really admires. The rest of the people in the industry acknowledge that our efficiencies are at a very high level. Second is our fuel mix that we use. In that, we have been increasing more and more of alternative fuels. Now, alternative fuels are nothing but waste from the other industries, right? So that helps us cushion the inflation in the traditional fuel that we run. On top of that, we've started just about, I think, toward the end of November last year, we actually commissioned our waste heat recovery plant. Now, waste heat recovery plant, it's an investment of over 100 crores, but it has started giving us benefits of in excess of 4 crores a month. Now, those are the levers which come into play to reduce our costs, which will help us. Most important here is number of Q4 volumes would be the highest in the year for any quarter. That gives us the operating leverage on the one side, and on the other side, all the maintenance work, fixed costs, which every quarter there's some large fixed costs on maintenance work that happens. In Q4, there's no maintenance work which is pending. So that's another saving of fixed costs. There are multiple levers which kick in Q4 for us this year, which should help us to actually close the EBITDA at a higher level than what we have in Q3.
Right. Deepak, we are completely running out of time, but one quick question. Cost of funds, is that a concern with regards to CAPEX? And if so, do you think RBI should start the rate cut cycle from this time? 30 seconds.
Well, rate cuts are always welcome because we are a large CAPEX-based company, very capital-intensive industry like cement. We always need the rates to be more affordable. With what we are hearing about the inflation coming in the range that RBI has been targeting, I think there's room for rate cuts, and we look forward to that relief so that as we start investing money and borrow some money, we don't get hit by very high rates of interest. We'll really welcome that. Thank you.
Absolutely. That's something we'll watch out for. Thank you, Deepak, so much for joining us on the show. Completely out of time. With that, it's a wrap on this edition on the Small and Mid-Cap Show. Thank you from Hersh and myself. Please stay tuned to NDTV Profit.
Hi, good morning. Thanks so much for joining in. This is Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Smriti Chaudhary. We'll take you through the next half an hour of trade. Let's very quickly take you through how the markets are faring right now. And I'm looking at my screen, and it's been a little bit of chop and churn. So let's pull up the intraday chart. We're trading with gains of about 0.4% for the Nifty 50, and it has managed to stay in the green for most of the session today, but there's been quite a bit of selling midway through so far. Of course, the broader markets as well. Let's take a look at that. The midcap 150 index trading with gains of about 0.8%. The small cap index up a little over that mark, 0.8%. Now, obviously, the breadth is favoring the advances at this juncture, and a few names, a few stocks stand out. In fact, let's look at the key contributors on the Nifty 15. We'll probably talk about one of the stocks that we're going to focus on at the start today, and that is Bharti Airtel. It is gaining about 2.8% and contributing quite a bit to the gains. Of course, the top gainers are TCS in terms of contribution, as well as Infosys from the tech pack, IT pack, and the IT pack is gaining ground. But let's focus in on Bharti Airtel. Before I hand it over to Smriti, let me introduce the guest today. We've got Saurabh Jain of SMC Global, as well as Amit Bhuptani of Nirmal Bang Securities. Thank you to the both of you for taking the time. Smriti, we're talking about Bharti Airtel. I think the big surprise came on the ARPU number.
Right, yes. Good morning, Alex, and good morning to the guests and viewers as well. You're right, the stock is up in trade today, and that's on the back of the results. On most parameters, it met the street's estimate, but ARPU, as you rightly mentioned, was the one that was a positive surprise for the stock. It came out at 208 rupees, and it was expected to be around 205. Last quarter, it was 203. So that was a bit of a positive impact there. But if you look at the Capex was also flattish this quarter, which is also a positive. It's supposed to moderate next year. That's the management's commentary, which is going to have a positive impact on the margins as well as profits as well. So that is why probably we're seeing brokerages also that are continuing to remain bullish on the stock as well. If you look at the numbers, revenue was up 2.3% to 37,899. EBITDA up 1.5%, 19,815 crore. Margin flat, as I mentioned, capped by 5G capex spends this quarter as well, and net profit up 37%, about 2,876 crore or thereabouts. So that's pretty much Bharti Airtel's earning in a nutshell. But let's go across to our guests, and Saurabh, welcome to the show. And you've seen the earnings. There's a positive, brokerages continue to remain positive on the stock. What is your sense for Bharti Airtel for the longer term?
I think longer term, for the long horizon, I think the stock looks good. I mean, the price correction is still market is looking forward to, and if that happens, then I think we'll be able to see higher margins and higher profitability. On the number side, they have added significant numbers of 4G and 5G customers. The premiumization have worked well. They have been able to add more postpaid subscribers. The bundle services also gain traction. The India business continues to witness strong momentum growth. So in that sense, I think if tariff increases does happen going forward, I think that will give a good boost to the profitability margins and the profitability.
Okay, fair point. Quick view, Amit, on the technicals as well. What levels to watch out for Bharti Airtel?
If you look at Bharti Airtel, the chart overall looks on the range bound session. The resistance zone for the counter is 1160 and the support is at 1110. So once if it gets a breakout of this resistance or support level, then again buying can be confirmed. Overall setup looks positive. Once counter goes again above 1160, new long position can be created.
Okay, fair point. Let's start with the queries, and a quick reminder to everybody tuning in, if you are joining in on any one of our social media platforms, you can in fact send us a message on those platforms. Alternatively, you can send us a message on the number that's on your screen, that's on WhatsApp as well. The first question I will take is from Deepak, and she's asking about a stock that was listed not too long back. This is Flair Writing, but it's not had a very good run so far. In fact, she's bought at levels of 482. She's got 116 shares, and she's losing ground. She says she's losing about 33% odd. The question is to you, Saurabh, on the fundamentals. I guess we know that Q2 and Q3 for companies like Flair are not very strong. Q4 and Q1 are the stronger periods. But what does one have to bear in mind if you are holding a substantial portion and you're losing about 30%?
See, these IPOs have come at a time when the small cap and mid caps have gained strong traction, have seen strong momentum in the secondary markets, and the valuations were not that comfortable. But it is a IPO frenzy. A lot of money are chasing the new issues, and that is what we have seen in case of this company. So the stock has prices corrected because of the higher valuation. Now, seasonality factor does work in this industry. I think you have to wait for Q4 and first quarter earning. I think it is better to wait for 2 quarter earnings, because still the brand has a very good brand image, and the lot of market share also. Company enjoys good market share too. So in that sense, I think don't average your purchase, but stay put for the next 6 months.
All right. Next up, we have a question from Manjunath, and they're talking about Coal India. Now, we'll take a long and a short-term view on this because they haven't mentioned. So, for Coal India, we've seen almost 100% gains in the share in the last 1 year, Saurabh, and the thermal power, or rather the coal sector, continues to remain positive in the sense there's more demand that's going to come, or the projections continue to remain that the demand continue to kind of say that the demand will grow in the coming years as well. So on that front, Coal India, is there more upside to the stock, and what is your sense of the sector as well?
See, on the operational front, it is expected that the numbers would continue to be good with the both in the volume, in terms of volume growth, and the price wise also. And moreover, one thing also, that what is happening in the market, a lot of re-rating is happening for the PSU stocks, and the valuations were clearly low for Coal India. We are seeing that we can say that the stock has jumped about 100%, but still, if you look at the valuations, they are still in comparison to many international companies also, they are on the lower side. So in that sense, I think it is better to hold the stock.
Okay, the next one that we'll take is. Okay, we're going to take a short-term
as well for Coal India. Amit, how does it look on the charts, Coal India, and what are the key levels to watch out for in the stock?
Overall setup looks positive. Continuously, we are witnessing that the volumes are getting added on the monthly and the weekly basis. So, if you look at the structure-wise, the uptrend will be continued in the market. Buy and dip strategy need to be recreated in this counter. The downside level for this counter, which is the support, is at 420. Once the counter comes near 425 to 430 levels, then again new buying position can be recreated, and fresh buying will be witnessed only above 450 levels. Once the stock manages to get stable above 450 levels, then again we might witness aggressive buying towards the 475, 480 levels.
Amit, on this next one, Himadri Specialty Chemical is the name of the counter, and it is gaining about 12% in the year-to-date so far. I'm talking about 2024. Sankara from Chennai is asking about whether or not it can be bought at the current levels, and if so, what is the target that you would keep? And he has not mentioned a time frame, so I'm guessing you can give him a short to medium-term time frame.
Definitely, if you look at the medium-term perspective, overall this counter is a specialty chemical front, and we have witnessed that in this counter, almost the strong buyers have been ready, and we can see again another round of buying, because from last 4 weeks we are seeing the consolidation is taking place from the range of 360 to 390 levels. The support for this counter is 345 level for the midterm perspective. Place the stop loss at 345. At this rate, you can recreate the new long position. Once the stock goes about 395 level, we might see, as per the chart structure, counter can go upside towards the 450 to 480 levels.
All right. Fair point. Next up, we have a question from Shiv Kumar from Dubai. They're talking about Praj Industries. They've already bought in 500 shares at 536 levels. Should they continue holding the stock? They say that the stock has already dropped to 473 levels, and it's currently trading around 505 levels. Amit, tell us what should Shiv Kumar do in this case? Should they hold on to the stock? Is there more upside left in this one?
Whatever negative need to come has come out. Now the stock is completely trading near the weekly support of 470 level, and we are saying that in today's trading session the stock is also trading about 200 TMA level. So once if in today's session stock gives a closing above 515 level in today or next 1 to 2 days of trading session, once it gives closing above 515 level, then again we might witness some positive outcome in the stock towards the 550 level. So hold the long position with the support of 470. Once the stock goes below 470, then only need to be exited.
Okay, on the fundamentals though, Saurabh, what are you seeing with regard to Praj? Of course, the story was about the ethanol blending or the facilitation of ethanol blending. Now there's a conversation about biogas blending with CNG as well. What's your outlook or what's your expectation of the outlook on this particular counter?
I think all the sugar companies are, seeing problem with respect to the ethanol. They are not getting the material from the FCI, and there is also learned to be a shortage of grains in the market. And next year, we don't know what will happen in the monsoon season. So the fortunes ties up with how the blending takes place in the country, and we have already seen re-rating in case of Praj industry. I mean, the valuations are on the higher side. The stock is trading close to 8-9 times the book value. So I think quite a lot is already priced in. In my sense, I think it is better to exit this stock.
All right, let's quickly take a view on Biocon as well. We've got Bimla Kukreja, who's writing in from New Delhi. Bimla, thanks so much for joining in. And Bimla wants to know about whether or not to hold. He's bought at levels of 250 and whether or not to book profits based on fundamentals and technicals. So first, let me go to you, Amit, on the technicals. What's the view?
We have recommended this counter to our clients also for midterm perspective. Almost we are seeing that on a monthly basis from last 4 to 5 months, a strong accumulation has been created in this counter, and we might see some reversal in the counter as we are seeing that on a weekly chart also inverse head and shoulder pattern has been created. So we are expecting this counter to show some momentum strongly towards 350, 370 levels in coming days of trading session. If the counter comes down towards the 275, 280 levels, then buy and dips strategy need to be created. So overall perspective for this counter on the technical front looks positive.
Right. Next up at
Sorry, I just want to very quickly take a fundamental view as well. He's trading with, he's holding on to gains, or a very quick view on Biocon. Should he hold on?
I think the numbers are improving. The September quarters, we saw significant improvement both on year-on-year and sequentially, and the valuations are on the lower side. So in that sense, I think it is a very old company, and things are operationally improving for the company. So in my sense, it is a good book.
All right, Saurabh, next counter that we're talking about is National Aluminium. This one's from Prasad and they're from Mumbai, and they've already bought in the stock at 136 levels. The stock is currently a little bit above that. It's around 157, so a bit of a profit there. But should they continue holding on to it? What's your outlook for the sector and particularly this counter as well?
I think all the metal companies' fortunes ties up with how the global economy pans out. In the US, we are seeing stronger economic data. Europe is also doing good. India is also doing good. The problem lies with the China. China recently, a big real estate company went for bankruptcy. So things there are not looking pretty. But if you are there in the metals for long term in the aluminium space, I think things are likely to get better. So for the very long term, I think more than a year or 2 years, if you stay, then you can easily make money. So in that sense, it is a hope.
All right, hold on, Nalco is a view from Saurabh. We have to slip into a very quick break, but Sushma is asking about Paytm, and I'm sure our viewers, apart from her, also want to know about this particular counter. It is, of course, broken past its circuit today, and it's trading with gains of about 2%. We've got that for you on the other side of this break, so do stay tuned. Welcome back. You're watching Ask Profit, and we're taking viewer queries. So, by the way, if you've got questions, you should send them to us on the WhatsApp number that flashes occasionally on your screen. There it is. We're talking about Paytm because we've got Sushma from Pune who's asking about this particular counter. She's bought at levels of 685.7, and today is the first day after 3 consecutive sessions that Paytm is not locked at lower circuit. In fact, in pre-open it was, and then it's broken out of that